Well, good morning or good afternoon, depending on where you are in the country. Welcome to the August 2023 WASDE review webinar. My name is Andy Miller with DTN. I'll be the moderator today, and with me as always is Todd Hultman, lead market analyst for DTN. Before we get started, just want to let everyone know that all participants will be in listen-only mode today. But please ask questions at any time during the event. To ask those questions, please use the chat button on the bottom right of the screen. Enter your question, and Todd will try to address those at the end of the session after he gets through his presentation. Also, this event is being recorded. We will have a rebroadcast of this early next week on DTN.com. So those are the basics. Todd, I will turn it over to you to start the show.
Thank you, Andy. Hello, everybody. Welcome to the August WASDE webinar we're going to be taking a look at here shortly. I just want to remind us that the one thing that's different about this WASDE report is that it includes responses from over 15,000 farmer surveys around the country. So when we see the yield estimates today, I would say it does tend to add a little more substantial evidence to what we'll be looking at. But as you'll see, we're still a long ways from having a strong confidence level about any crop estimate this time of year. So crops are obviously still developing, especially in the case of soybeans, and there's a lot more information gathering to be done. So with that in mind, let's go ahead and jump in, take a look at what USDA said here on Friday. We'll start with corn. Here's the US balance sheet, and we'll just jump to the right-hand corner very quickly, and we can see that the ending stocks estimate was reduced from 2.26 billion bushels, now down 2.202 billion bushels. So it's still a high ending stocks level for corn. That's still a fairly bearish estimate as far as prices are concerned. USDA looking for an average farm price $4.90. Now looking at the production estimates in that far right column, this is what we've all been waiting for. What's USDA going to say today? Just for your information, the acreage estimates were all kept the same for corn and soybeans today. It's in the September report that USDA will consider additional data from the Risk Management Agency and the Farm Service Agency as to whether or not they want to change their acreage estimates. So that'll be coming up in September. Today, the focus is on the yield, and that number came in lower than it was in July. We're down to 175.1 bushels an acre. That's very close to what analysts were estimating in the Dow Jones Report survey. The new crop estimate is that second arrow, 15.111 billion bushels, still a big crop. It's very close to the all-time record of 15.15 billion bushels set back in 2016. So that's still in play and still in contention as the year goes. I should also mention that the farmer surveys that went out in the last week of July and the first week of August. So it's very likely that most of the survey responses were gathered before the most recent rains of August 5th and 6th. If you remember, we had a pretty wet weekend in there for much of the Midwest. So it's likely that most of the surveys did not reflect those rains. I'll just throw that out there as well. Now I want to draw your attention to the left-hand column. This is the old crop season, which we're still in until the end of this month. In that regard, if we look at the bottom rectangle, we see that the ending stocks estimate was increased 55 million bushels up to 1.457 billion bushels for ending stocks. So it's still lower than it has been, not the past 2 years, but for the past 10-year stretch. It's still on the lower end of corn supplies that we've seen. And of course, we came up short in last year's crop with quite a drought situation across much of the country. There were three little tweaks to the old crop estimates I just want to point out. First of all, the import estimate was increased by 11 million bushels up to 35 million bushels. The feed demand estimate, which is also a residual account, was, whoops, that one was actually kept the same. And excuse me, the food and seed demand category, I've got my arrow one step too high there. The food and seed demand category, 6.635 billion bushels, was actually reduced 20 million bushels. So that's what accounted for the much of the increase in the old crop ending stocks. Now looking at the demand estimates in the new crop season, which is the right-hand column, we see a couple changes there. The feed demand came down 25 million bushels. It's now at 5.625. The ethanol demand estimate stayed the same, but again, the food demand estimate was reduced by 20 million bushels. And then lastly, the export estimate for corn in the new crop season was reduced 50 million bushels to 2.05 billion bushels. So you put all those together with the smaller crop, and we got a 60 million bushel reduction in the ending stocks estimate, but it's, as I say, still quite high, 2.202 billion bushels. So still a bearish pressure on our new crop corn price. Go ahead to the next slide now. How did the USDA see the corn crop developing this year? Well, again, with help from their survey results, but also help from satellite and weather data, which they also gather. This is the best yield estimates they could come up with for this date. And we see some really fairly decent yield estimates given the drought situation we've had in the country this year. Taking a look at the top producer, last year's top producer, Iowa, they're expecting a 203 million bushel corn yield, 201 in Illinois. Indiana and Ohio also doing well in the 190s. It's the Dakotas again, although South Dakota is better than last year. Dakota's on the lower end of the scale, along with Kansas, which traditionally has a lower corn yield anyway. But I'd say is in terms of drought, Minnesota and Wisconsin have been taking a hit most recently. We see Minnesota at 183 and Wisconsin at 166 on the yield estimates. I should mention on Monday here at DTN, we put out our own yield estimates. We call it the Digital Yield Tour, and it's a collaborative effort that we do with Grow Intelligence every year, and it's based on satellite and weather data, and I'd say extensive data and comparisons made to previous years. And we came in with a little higher yield estimate of 177 bushels an acre. I won't get into the details because guess what? On Tuesday, we're going to have an Ag Summit series, and people from Grow Intelligence are going to be here to speak to our audience. And they'll explain more about what they're seeing and how they do what they do, but they've been very good and we're right on the money last year with the corn estimate. So I'll give you that registration information later, and I'm sure Andy will help remember do that also. But these are the yield estimates starting here in August. As far as the world supply and demand table, if we look at the upper right-hand corner, we see USDA's ending stocks estimate for world corn was reduced from just over 314 million metric tons to roughly 311 million metric tons. The ending stocks estimate for corn excluding China was reduced slightly. It basically stayed the same, 109.75 million metric tons, and we'll see how that compares to previous years in just a moment here. Some of the changes I want to note, the obvious change in today's report under the production column and the second column there was the reduction in the corn crop that we saw today. So that was the biggest influence that helped bring down that ending stocks estimate. The South American estimates were kept unchanged as far as the new crop season goes. And keep in mind, they have not planted their new crop season crops yet. They're just in the process in Brazil of getting through their final corn harvest. And by the way, USDA's estimate estimate of Brazil's corn production in the previous season, which includes the corn harvest that's coming in right now. That estimate was increased from 133 to 135 million metric tons. So Brazil on track for a very large crop there. Just this morning, Brazil's crop agency, CONAB, increased their estimate up to 130 million metric tons. So there's a little difference of opinion there between the US and Brazil, but in both cases, those are record crops, and that's going to be a lot of corn for the US to compete against in the months ahead. The other two changes I want to point out here before we move, Russia's corn crop not doing so well. Evidently, USDA reduced that from 16.3 to 14.6 million metric tons. But in Ukraine, the crop estimate was increased from 25 to 27.5. Now, we've been hearing in the past several weeks that Ukraine's corn and wheat crops actually are doing very good this year, have had very good weather conditions. They've had much more consistent rain than we have. Of course, the problem for Ukraine is how are they going to ship it out the country now that the Black Sea deal has ended and Russia has been actively attacking their grain infrastructure and grain ports. So that remains a difficult situation. If you notice to the right, I did not highlight it, but under the export column, USDA did not increase its estimate of Ukraine's corn exports along with the higher production this year. So they're obviously acknowledging how difficult that is. Let's see what we have next here. We have a comparison of the world ending corn stocks excluding China, which I think is the more important metric to keep our eyes on. Here, USDA in the new crop season is estimating 4.32 billion bushels of world-ending corn stocks apart from China, and that's the most that we've seen in 5 years. So corn supply is expected to be comfortable as far as world supplies are concerned this year. And of course, Brazil having a big record crop, plus the United States on track for a 15.1 billion bushel crop have a lot to do with that. So that's where a lot of the supply is going to come from. Let's take a look at the corn basis. Now we saw a sharp drop in the basis levels in the month of June, and that's common typically as corn makes the transition from the old crop season to the new crop season, especially when we had a tight situation in the old crop season. You know, we're used to seeing the strongest basis in 20 years. Well, that's no longer the case, but having said that, the basis has maintained stability here over the last month. We're basically 39 cents above the September futures contract was last night's reading of DTN's National Corn Index, which is a cash corn average for the country, priced at 522 last night. So the basis has leveled out. It's still among the best corn bases we've seen. Here it's the fourth strongest basis example we've seen for this time of year going back to 2010. So it's still in the upper 1/3 of as far as basis levels goes. And why do we care about that? Well, it's a good sign of just how strong the demand is for corn, and especially domestic demand, which includes a lot of feed needs. U.S. corn exports, unfortunately, I can't say the same for. Our corn exports are on track to come in at the lowest level we've seen in 10 years. That's largely because we came up short on our crop last year. And at the same time, Brazil had a record crop last year and is on track for one right now. So we're getting a lot of competition from Brazil. Corn prices are cheaper in Brazil than they are here in the US. And that's really, as you can see, hurting our export pace. The red line is our current export pace now. We just have 28 days to go. As of August 3, we've shipped 1.47 billion bushels of corn, but that's much less than we did last year, which is the green shaded area, and far below our 4-year average, which is the black line. So we're down 35% from last year. And right now, USDA is estimating, or actually reduced the export estimate in today's report by 50 million bushels. So that's not, or excuse me, 25 million bushels. The old crop export estimate in today's report reduced 25 million bushels. Now it's down to 1.625 billion is the expectation by the time we get to the end of August. So we still have some work to do to get there. December corn prices in general, along with spec activity, is what I am trying to show on this chart. As you can see, it's been a very volatile summer for December corn prices. We had the weather scare in early June. It was on June 1st when the drought monitor first showed kind of an eruption of abnormally dry conditions across the Midwest. That continued for the next few weeks. We saw a big run up in prices in a market that had been short and expecting really good weather this year. Was the forecast not only of DTN, but a lot of services, which was expecting the end of La Nina conditions. We were expecting a milder summer with more widespread rain chances, but that's not what happened. El Nino took a different path this year. It evidently blocked a lot of the rain chances. We did not get much rain at all through May and June, and by the end of June, we were looking at some pretty severe crop stress across the country. Since the end of June, much of the country has gotten beneficial rains, and I still think it's a little remarkable. I'm still a little bit stunned maybe at what we're hearing about how much the crop has bounced back in many areas. Not all areas, of course, but as you can tell by today's, if you can tell by today's report, which includes producer surveys, I think a lot of folks would say that they've got better looking crops than they certainly expected to see a month or two ago. And there's more rain in the forecast this week, so the crop is still filling in some areas where it's not too close to maturity. The outlook here remains bearish. I think given the fundamental outlook and the competition from Brazil, it's probably a matter of time before we see prices break support here. And I think sometime between now and the harvest period, we're probably going to see new lows in December corn, barring some kind of surprise. But that seems to be the path we're on at the moment. Surprisingly, the specs in corn are still net long 80,000 contracts. That's what the red bars on the bottom are about. So I think there could be still some pressure ahead for them to liquidate as well. Soybeans, taking a look at the U.S. balance sheet in today's August report. Let's go ahead and again, we'll start with the ending stocks estimate in the lower right-hand corner. The new ending stocks for new crop soybeans, 245 million bushels. That was just a little bit less than the trade was expecting. They were looking for 261 in the Dow Jones survey, but I think this is much closer to what many of us were expecting for a new crop soybean ending stocks estimate. What did USDA say about the production potential this year? Well, they did lower the yield estimate, which is at the top of the far right column. Instead of tying the record in soybeans at 52 billion bushels, now USDA is estimating 50.9 bushels per acre. I think I said billion bushels. Sorry about that. The new yield estimate, 50.9 bushels per acre, is very close in line to what earlier trade guesses were expecting. Most guesses were right around 51. The production estimate now, because with the lower yield, is 4.205 billion bushels. And I can just tell you, looking forward, we may not have a big enough crop to meet all the demand that could be expected in the year ahead. Time will tell, but things are looking pretty thin again as far as soybean supplies go. Some of the tweaks to demand, there was a 10 million bushel increase in the import estimate for new crop soybeans. I should also mention for old crop soybeans, there was also a 5 million bushel increase in the import estimate. So with the lower supplies, it's not uncommon that end users in the U.S. get some beans from South America and ship them up. And that's kind of normal for a year when your soybean supplies are tighter than usual. And of course, in this case, we also have very strong domestic demand being used to crush soybeans. We've got very strong demand for both meal and bean oil this year, and that's helping the demand situation out. On the new crop side, again, they lowered the export estimate 25 million bushels for new crop soybeans, but for old crop soybeans, they kept it right where it's at, and there's good reason. We're very close to being on pace to achieving that by the end of this month. The average farm price expected for soybeans, $12.70. DTN actually has a little higher view. I don't have that estimate yet today, and I probably won't be doing those fundamental estimates until we get a little more solid idea and a little more confidence in the crop estimates that are coming out. So sometimes there's just no reason to jump too far ahead when you don't have a lot of certainty in the numbers you're looking at yet, and that is the case in my view in August. Soybean yield estimates from the various states came in. Of course, Illinois is a big story this year. We had very seriously tough drought conditions going on in Illinois right toward the end of June. And then, as I mentioned, as happened for a lot of states across the Midwest, the rain gates seemed to open up in July and early August. So we've seen a remarkable rebound from earlier conditions. Now USDA is looking for 62 bushel per acre soybean yield for Illinois. That would be very good. Not a record, I don't believe, but very good considering the weather conditions we've had this year. Indiana and Ohio also looking very good. They had a little more protection from the extremes of the drought situation this year. Once again, Minnesota and Wisconsin suffering from a later dry spell, especially the last 2 to 4 weeks. They have not seen a lot of rain across Minnesota and Wisconsin, so things remain stressed there. 49 and 50 bushels an acre we're looking at there. Iowa, big producer, looking at 58 bushels, which along with Nebraska, another big rebound story this year. Missouri, probably every week we looked at the crop progress ratings and the subsoil moisture deficits. Missouri just was taking it on the chin and seemed to be having the hardest time, but even they're hanging on with the 45 bushel estimate on their soybean yield. So that kind of tells the story right now. And frankly, for our digital yield tour, we're also very close. The digital yield tour came in with a national estimate of 51 bushels an acre on soybeans. So a lot of agreement there at this point in the season so far. The world supply and demand estimates for soybeans, if you look at the upper right corner, the ending stocks estimate was reduced slightly from almost 121 million metric tons down to 119.4 million metric tons. There were no changes to the old crop estimates for South American soybeans. I can mention that. Of course, the U.S. soybean crop was reduced, and that is the main reason for the reduction in today's ending stocks estimate. The South American new crop estimates did not change at all this month. And of course, they don't start planting soybeans in Brazil until September. So that crop has yet to be on the way. And then China, the demand estimate, which is in the third column from the right, their demand estimate for soybeans has not changed according to USDA. Still looking for 118 million metric tons of demand out of China. The reason I mention that right now is we have another situation once again where China's economy is not looking good. They came in with a pretty tough deflationary report the other day. They had a 2% drop in their stock market today. They're approaching, and probably, I would guess, probably will break new summer lows here pretty soon in their stock market. So their economy is suffering. But I can tell you that as far as soybeans are concerned, China's soybean prices are maintaining what are close to their highest levels of the year. They still look very much interested in buying and needing soybeans from abroad. So right now, of course, they're buying from Brazil, but most recently they've started buying new crop soybeans from the U.S. Now, if you do a comparison of this year versus last year, the early buying of U.S. new crop soybeans was much on a much quicker basis. They were, I think, we're down roughly 40% from where we were a year ago on new crop purchases of soybeans. But it's a little bit of an apple and orange comparison because if you recall, last year Brazil had a drought when they were raising soybeans, so they came up short on their crop, and that spurred faster sales or faster purchases of U.S. soybeans. We don't have that situation this year. Brazil had a record harvest, and so it wasn't until after the June 30th planting report when USDA revealed that there was only 83.5 million acres of U.S. soybeans planted. That's when we saw the new crop purchases starting to pick up. So it's gotten a little more active lately, even though it's still down quite a bit from last year's pace. The soybean basis generally has been declining through June and July, trying to find some stability here, but not really seeing it just yet. Overall, again, now it is maybe a bit unusual to see this much of a decline when we could be looking at another year ahead of us of tight soybean supplies in the new crop season. So this will be interesting to see how this changes, but we do see very strong domestic demand for beans, but the basis level definitely has come down from the tighter levels that we saw a few months ago. Soybean exports keeping very close pace. Now we're down 7% from a year ago, but USDA has been estimating, I believe, an 8% drop from a year ago. So we're very close to being on track with USDA's export estimate pace. We just need 46 million bushel more shipments in the next 28 days, and that seems like something that's quite possible or doable. So it looks like we'll come in very close, and I think for that reason, it was good that USDA did not change the export estimate for old crop soybeans here on Friday. The soybean crush incentive continues to be remarkably high and profitable for soybean processors. So in this chart, the blue line shows us the value of what you get from crushing a bushel of soybeans. You get $17.24 worth of meal and oil. The cost of the bean, and this is all using the September futures contracts, the cost of the bean, $13.51. So the difference there is $3.73. This is as of last night. This is some of the richest premiums processors have ever seen, and largely the big boost is still due to the growth in demand of using soybean oil to make renewable diesel. So that story continues, and the latest statistics on soybean oil being used for making renewable diesel still continue to be red hot. The month of May, we saw a record amount of soybean oil used for that purpose, and it was actually up 33% from May of a year ago. So that continues to be a very strong source of demand for soybean and soybean prices in general. The picture here of soybean prices and speculative activity, like corn, it's been a very volatile summer that we've seen. We started out with very bearish expectations. We were looking for a record soybean crop. And then all of a sudden, we realized that much of the Midwest was in drought. And so that started off the rally. And then about halfway through, when we got that June 30th report, that only 83.5 million acres of beans were planted. That added another leg to the rally. We've since come down in price the past 2 weeks, thanks to rain in the forecast. And of course, we've received several beneficial rains since that time. So that's pulled the soybean price down a bit. But again, the demand story remains very strong. And in the case of soybeans, there's a lot more support for the price of soybeans than there is for corn coming from the demand side. And we see that here. Non-commercials, for their part, of course, they got almost bearish about soybeans at the end of May. But given the things I've just talked about, they've become much more bullish and are still holding a sizable net long position in soybeans, over 113,000 contracts in the most recent report. The rains, I just thought I'd show here. This is the past 30 days, and this shows some of the rebound or quite a bit of the rebound that we've seen in crop conditions over that period. If obviously the red areas, it's on the chart, it's about 4 inches of rain over the past 30 days. If you get to the pinks, it's more like 6 inches. And of course, the grays right there along southeast Missouri is too much rain. That's 10 inches plus. The yellower areas are where the rainfall totals have been lighter. And on this chart, you can see that there's been lesser amounts in southern Minnesota, northeastern Iowa, and I'd say part of North Dakota and the far northeast corner of South Dakota. So that's kind of told the story of where states have enjoyed a much needed recovery in rainfall, but also some of the states that have not quite gotten the same amounts, and that explains some of the differences that we saw in today's yield estimates. For wheat, lastly, let's take a look at the U.S. balance sheet on wheat. Now, in the case of wheat, NASS not only updated their production estimates today, but they also looked at the data that they had available and updated their acreage estimates. And again, they'll do that for wheat today. They won't do that for corn and soybeans until the September report. So the first thing we see if we look at the far right column, which is the new season, we see a slight increase in USDA's estimate of planted wheat acres. They increased that 200,000 acres to 49.8. They also increased the harvested acres to 37.9. So we still notice there's a big difference between the two. And we had, of course, very rough conditions in the southwestern plains this year that lost a lot of potential for harvested acres. The new wheat yield, even though the acreage estimates went up slightly, the new yield came down 0.3 to 45.8 bushels an acre. So overall, it worked out to a slightly smaller production estimate of all wheat production today, 1.734 billion bushels. Now in a second, we'll get to the different classes of wheat to show you who had the increases and who had the decreases. For now, the ending stocks wheat estimate in the lower right corner, we see increase from 592 million bushels up to 615 million bushels. That is slightly more than expected. It's a 23 million bushel increase, but it's, I wouldn't say anything crazy or too dramatic for the market to handle. So in addition, there were 2 other tweaks to the estimates I'll just point out. The estimate of wheat use for feed demand was reduced by 3 million bushels to 974, and the export estimate in the new season was reduced from 725 to 700 million bushels for wheat in the new crop season. So continues to be a very difficult international market for the U.S. to get much wheat business out of, and of course Russia has dominated a lot of that with their low prices. So overall, international wheat prices have been depressed, but especially here in the U.S., it's been very difficult to sustain any type of rally in the wheat price, even though this ending stocks estimate that I've given you today is the second lowest total in 10 in 10 or 11 years. I wrote it down. I believe it's the second lowest total. Well, excuse me, I show third lowest total in 20 years. Sorry about that. Third lowest total in 20 years. Yeah. So historically, it is a tight wheat supply situation we have, but without demand, we're just not getting the bids to raise those prices. Winter wheat. Yeah, so this is from NASS. This is the crop production report, and this tells us about the different classes. The new winter wheat estimate, 1.227 billion bushels. Once again, I've got that label wrong. It should be BB for billion bushels. My apology. That was more than expected. And what you're going to see is that the winter wheat totals were up, but spring wheat total came up short. So the estimate of hard red winter wheat was 585, slightly more than expected. Soft red winter wheat came in at 440, which was more than expected, but we all knew that they had very good conditions this year in the Eastern Corn Belt for that wheat. The white wheat harvest coming in at 202 million bushels is slightly below expectations. It's been a little drier out in the Pacific Northwest. And then other spring wheat was expected to come in at 473 million bushels, but instead it's coming in at 450 million bushels today. And I believe we're looking at what looks like maybe the second lowest spring wheat crop in 35 years. So not a very big crop. And then lastly, I don't have it on here, but the Durham estimate came in at 57.4. That was up just a little bit from July's 54 million bushels. So another small crop for Durham wheat. Spring wheat yields, I thought I would just throw up here. Of course, North Dakota is the largest, most productive state. They usually come in with roughly half the entire crop. Their wheat yield estimate is 45 bushels an acre. In last year, they did 50 bushels, so that's down a little bit. Minnesota's a big producer, coming in at 50 bushels an acre. Last year, they did 61. In Montana, you're looking at 28, South Dakota 30. And then, of course, you see the best yields over there in Idaho, where they typically have a little better situation, or at least they definitely have the past 2 years in a row. And then in the state of Washington, 45 bushels an acre, very close to last year's 46. So it was a decent year for North Dakota in USDA's view, but in many ways a much tougher year, and especially in the northern part of the state, they just did not get as much rain. And of course, if we look north of the border, we would also see some drought stress to crops in the southern halves of the provinces of Alberta and Saskatchewan. It seems like Manitoba is doing a little better, but Saskatchewan and Alberta have a drier crop estimate in the southern half of the provinces. As far as world wheat estimates go, we'll be talking about Canada here again in just a minute. But if we look at the upper right-hand corner, the USDA's estimate of ending world wheat stocks was reduced by 1 million metric tons. So just a slight reduction from 266.5 to roughly 265.6 million metric tons. The wheat supplies, excluding China, were increased by roughly 1 million metric tons from 129.4 up to 130.7. So overall, the wheat supply situation is staying fairly close in USDA's view to what we saw last year. Now, I want to direct your attention to the second column from the left, the production estimates. And there for Canada, we see a reduction from 35 to 33 million metric tons. That's where I was talking about the dry conditions in the southern half of the provinces. Although Cliff Jameson tells me the northern halves of the provinces are doing quite well and often have the bulk of production. European The European Union was downgraded from 138 to 135 million metric tons. We've been hearing about hot conditions in the south, and for a while they had dry conditions in the north. Now I understand they're having some rain issues at harvest time, maybe especially in Germany. So that crop being downgraded. In Russia, the wheat estimates kept unchanged at 85. But again, in Ukraine, we see an increase in the crop estimate for wheat. Instead of 17.5, we're looking at 21 million metric tons, which seems just remarkable considering the wartime situation that farmers are dealing with there. But as with corn, if you look to the second column from the right, you'll see that USDA did not increase the export estimate for Ukraine's wheat. So they acknowledge that even though you've got a bigger crop, it's going to be difficult to move this year, and we'll just have to see how that plays out. World wheat supplies, excluding China, how do they compare? Well, they're actually very similar to what we've seen the past 10 years, but they are at the lower end, or I should say, the new crop estimate is the second lowest in 11 years. The old crop estimate is actually the lowest in the 10-year period. So we're in the new season, we're looking for a slightly higher supply of ending world wheat stocks. Now, International Grain Council has a little different view. They're looking for the tightest ending stocks among major exporters in 16 years. And they'll be coming out with their new updated estimate later this month. So I often find it helpful to compare the two because they both have big global reaches and resources on estimating crops. So not much more to say about that, I guess. We're just looking at a very similar situation to last year in terms of the expected world wheat supplies available. I'd say we're looking at a harsher wartime situation than last year in terms of it's going to be more difficult for Ukraine to move the wheat that they produce this year. How's the HRW wheat basis doing? Well, according to our DTN National HRW Wheat Index, it's not doing very well, to be frank. It just shows declining demand the past several months. Last night's value of $7.03 a bushel on our cash wheat index is 64 cents under the September futures. So that's a sign of weakening demand. Really, ever since May, we've seen that trend. Kansas City wheat chart here. As you can see, we've just been in a very defined sideways trading range most of the year. We did have one attempt to close above $9 in July, but obviously it did not last very long. And that attempt came after the Russia's made it known officially that they were not going to participate in the Black Sea Grain Initiative. So there was a little bit of bullishness in the aftermath of that announcement. And of course, when they started attacking Ukrainian ports, there was some bullish excitement. But as you can see on here, it just did not last as far as being able to support higher wheat prices. So remains stuck in the same range, although it is interesting that specs are somewhat net long. These are not big positions, 14,000 contracts in Kansas City wheat is not a big position by any means. But it is offering some support at this time to the wheat price. One thing I want to remind you about today's report, the production estimate of 15.1 billion bushels of corn, there's a margin of error with that, and WASDE produces those statistical numbers at the end of their report. And in today's report for August, that production estimate has a margin of error of plus or minus 10.9% to have 90% confidence in the estimate. So I hope that makes sense. But basically what they're saying is that the valid range for today's estimate is 13.5 billion to 16.8 billion bushels, which in my mind is still a very big range. So this is not an estimate today that you'd put a lot of confidence in, saying it's 15.1. And so I just want everybody to know that. Similarly with soybeans, they've got a plus or minus 10% margin of error, and that puts today's estimate somewhere between 3.78 and 4.63 billion bushels. So there's a lot still to be learned. Crops are still developing, and there's still weather risk in the market, is what I want people to understand. In conclusion, I'm calling today's report bearish, even though it came in very close to expectations. Just the fact that we're still looking at our near record US crop this year, and we're looking at an ending stocks estimate above 2.2 billion bushels is still obviously a bearish situation as far as prices are concerned. In terms of soybeans, today's report I'm calling neutral. The ending stocks estimate was close to what was being expected for today's report, and you could make an argument that it's slightly bullish because it does suggest that we're going to have tight soybean stocks still ahead in the new season. And for wheat, I'm saying slightly bearish, simply because even though we're looking at the second lowest US wheat stocks in 10 years, the world wheat supply estimates are looking very similar to last year. And obviously, we got through last year with low prices and helped by poor demand and not a whole lot of drama out of Ukraine. This year, we have more drama as far as potential interruption for the grain trade in Ukraine. But I would say today's report was still slightly bearish. Really gave them nothing for traders to hang on to rally the market or believe in higher wheat prices at this point. We have another WASDE report coming up September 12th and another event coming on Tuesday. I mentioned earlier, we have an Ag Summit series coming up Tuesday, August 15. That's just 4 days away. Here is the link where you can register for that report. Or I say report, it's an event. We bring in speakers to talk about different topics, and among the speakers this time around, we're going to have representatives from Grow Intelligence talk about this year's digital yield tour, how they come up with the numbers they do, what they look at, and what they're seeing for crops this year. So I think you'll find it fairly interesting, or it's always been interesting to me, the process that they go through. And I really got a lot of respect for them last year when they came up with such a good call on the corn crop last year. But more and more, I think every method, I would say, has an Achilles heel. There's pros and cons. And if Grow has one, it's that they're not able to get into the field and peel back the husk. But other than that, they put together a lot of very good and helpful data that hones in on what those yields could be. And so I've got a lot of respect, and I think you'll be interested hearing from them. If you can't make it, Tuesday morning is when the event kicks off. There will be a replay link, so don't worry about that. I know folks are busy in the fields and got plenty to do, but there will be a replay link if you register. So Andy, this is a great time if you have any questions.
Yes, we do. Thank you, Todd. And thanks everybody. Sorry for the slight technical glitch with the chat. Thank you for putting your questions in the Q&A section. I did want to also say before I jump in, there's no way for me to post a question, but I did put an alternative link to the Ag Summit series in the Q&A section, because that's kind of one of the few places we can post things like that. So if you didn't have a chance to scribble down what Todd had put in the slide before, you can also use this alternate link under the first question in the Q&A. So that said, we do have a few questions. The first one, how can the USDA price for beans be less than this year when the carryout is less?
That's a very good question. Thank you, Andy, and whoever asked that. So just for reference here, the old crop estimate is 260 million bushels of ending stocks, and they're looking for an average farm price of $14.20. And then the new crop ending stocks estimated at 245, looking for an average price of $12.70. Well, there's a few different angles to this question, and I have tried to ask USDA before about, do they have a certain formula or guidance for coming out with the average farm prices they do, and best I can tell you is that they don't. I think it's a very subjective process. But also keep in mind that, for instance, when the first initial estimates come out in May of the new season, there's no price history yet. But then now here we are, May, June, July, August, we've got at least 3 months of, no, excuse me, sorry. Uh, what I was trying to say is when the new season begins on September 1st, then they start including the prices that soybeans traded at through that time. So by the time we get 6 months into the year, the average farm price estimate is already half determined. 6 months of it's already in the history books, and then the only estimating part is the remaining 6 months. And by the time you get to the end of that season, the average is whatever the average was. So in this case, we had a very bullish market behind us, and that's why the average is up around $14.20. Now, when USDA looks at this, I can't speak for them, but they're starting already from a different price level. So they're kind of anticipating from where we're at here. So I hope there's a little bit of, I hope I enlightened a little bit on the topic, but I don't have a good answer as far as, if they have a formula or anything to guide them, because as far as I can tell, they don't.
Okay. Another question for you. Not sure if you have the crystal ball for this one, but how long do you feel Russia can hold out on the trade agreement with the Black Sea?
Ooh, yeah. Um, that's a good question, and I think the answer is going to come down to how successful are they going to be moving wheat without a lot of cooperation from the West. And one of the problems is since they've pulled out from the Black Sea Agreement, they've taken on a little more unpopularity, and it now costs them more in terms of insurance to ship their grain, and there's fewer shippers out there that want to deal with them. So it's not an official sanction or policy or anything because nobody wants to be known as the bad guy for stopping the flow of food. But privately speaking, in the market, Russia is finding that there are fewer and fewer players that want to cooperate with them on grain trades. So I think that's somewhat the key of uh, just how long they'll be able to hold out without really be negatively impacted by their wheat exports. And of course, you're also dealing, the guy who makes the decisions about this, I'm not sure how much he cares about the wheat trade. He's got a lot of other uh, reasons for making the aggressive decisions toward Ukraine and the rest of the world that he is. So I haven't been very successful in trying to figure out that mind. So I'll leave that where it's at.
All right. There's just a question here about just your perspective on soybean oil and or canola and where that stands.
Yeah, I'm still bullish. As I say, I think soybean oil and possibly canola still deserve a higher value given the demand that we're going to be looking at in the year ahead. Even though the renewable diesel crowd did not get the EPA numbers that they hoped for, there still seems to be sufficient room in there for growing this year and into next year. So, somewhere in 24 or 25, maybe the EPA decision puts a little discouragement in the expansion plans. But so far, we're not seeing the discouragement in the expansion. So far, it's full steam ahead here in 2023. So I think those are going to continue to be strong markets. And really, they in the case of soybean oil, it's taken off since June, and it's outperformed the whole grain sector for 2 months in a row now, and obviously is doing quite well.
Okay. So a question related to the drought topic. is the Mississippi River getting lower? And what's your sense on how that may impact rates and just essentially things
Yeah,
overall?
yeah, that's a concern, Andy. There, a lot of the forecasts for river levels are diving in the days ahead, and we'll have to see what it looks like this fall. At the same time, well, it's been very difficult to make long-term forecasts this summer. Just the whole weather condition that we've been in, as John Brannick has explained a lot, it has not lent itself to strong weather patterns. What we've seen is a lot of pop-up hit and miss shower activity this year, and that's still somewhat true. We also, though, um, in while on one hand there's a lot of concern about river levels, I also noticed recently that they're talking about greater chances of hurricane activity this year because of the ocean waters around Florida being so hot. And the National Service came out with an article, I think just today or yesterday, about that. So if there is more hurricane activity, that does give the southern U.S. a chance to keep those river levels up. So I still think it's a little bit up for grabs. I don't have a lot of confidence in any long-term forecast at this point in this situation, but that's definitely a concern. I would say Brazil is a bigger concern than our river levels for corn. That's what I'm most concerned about. They could be out competing us for several months here.
Okay. Just one more question, Todd. With the recent rains in China, will the recent rains in China justify more imports by China?
Um, um, yes, and you know what? That's something I missed mentioning today on the wheat estimate. USDA also brought China's wheat estimate down. I think it was 3.5 million metric tons. Sorry about that. I missed mentioning that. But they did not change the wheat import estimate. So it remains to be seen if China will become a buyer of wheat. Of course, if they do, they're not going to buy from the U.S., right? They'll buy from Russia or maybe Ukraine if they can work out a way to get the wheat, or Europe, depending on what's cheap and what's available to them. But the U.S. won't be in there. And then if you mean import estimate as far as soybeans, because the corn and soybean areas got hit with heavy rains recently, really corn is the only thing that would be materially changed there, and it's more likely that they're going to get corn from Brazil if they need it. So once again, I don't see us being a part of that picture.
Gotcha. All right. Well, that wraps up the questions. Thanks everybody who submitted, and just thanks everyone for joining in general today. Just a quick reminder, we have recorded this session and it will be online early next week on DTN.com. Todd has graciously, as always, put his information up here. If you have any additional questions, let you grab that real quick. And then I'll just say thanks one more time, and have a great weekend and a great rest of August.
Thanks, everybody.